Micron Technology, ticker symbol MU, reports earnings today after hours, June 26. And today we found unusual trades happening on Micron. And so in this video, we will analyze this unusual option activity to find out how wealthy investors or insiders are trading Micron for earnings. Are they bullish or bearish? So that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked insider information, such as earnings reports, to make better financial decisions. So without further ado, let's dive into the data as usual. As we can see on the option time and sales tape, there was actually two very unusual trades happening. One of them is this one, the largest quantity here, happening at the same time, and another one that happened less than an hour ago. 1,000 contracts for the December 20 options. So we will analyze both of these to find out, are they bullish or bearish? So let's start with the most recent one, the December 20 options at the 120 strike puts and the 200 strike calls. So as you can see here at the 120 strike puts, we have 1,000 contracts being traded for the volume, greater than the open interest of 684. So we know these are opening trades. And you can see here our position selling these puts to open. And for the 200 strike calls, we can see the volume of 1,000. Open interest is actually greater than the volume. So these could potentially be closing trades. So there is a slightly higher level of risk with this trade here. We are in the same position buying these 200 strike calls to open. And so when we analyze this trade, you can see what this looks like on the profit loss graph. On the x-axis is the share price of Micron, currently trading right here at $141 per share. And on the y-axis is the profit loss, 0 here. So if the purple and blue lines are below the 0, we have a negative loss. If it is above, we have a profit gain, positive. Okay, and so what you notice about this trade is that it is hedged. You can see this is the break even where the 0 meets the blue line, and the blue line represents expiration. So if Micron were to drop after earnings, it will be at a loss, a minus, but as we move in time towards expiration, December 20, it will then start to increase in profits and eventually become a gain, okay? Because you can see that the blue line is actually above 0. As long as we stay above this break-even level right here, $118 per share. Okay, so this trade is hedged to the downside. Okay, so it is not extremely bullish because they are hedged. So keep that in mind. And also, the value of this trade is quite significant because they are selling, like how we are also doing, selling the 120 strike puts. And since we are selling these puts, it is a cash secured put, which means that we are willing to own 100 shares at $120 strike price. So each trade requires $12,000 of buying power to put on this trade. And since this investor had 1,000 contracts or trades, they needed $12 million just to put on this one trade. Okay, so keep that in mind. if you are trading this, that this requires a lot of buying power. We are simply following this trade. Since we do not have the time to develop our strategies, we focus most of our times on the higher chance of profit trades where there is no earnings and there is stronger data. If you are interested in those, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link at the top here where we share the trades that have higher chance of profit, not like this one because this is an earnings trade. It has higher risk. So keep that in mind. Now, for the second unusual trade that we detected, let's take a look at what they are doing for the second trade. You can see here, these are July 19 options. The quantity is actually different. This is a ratio strategy here. Okay, so 5,250 at the 160 strike calls and 3,500 for the 150 strike calls. And we can see that this is a spread. Okay, so let's take a deeper look at the chain to find out what this investor is doing for the July 19 options at the 150 strike calls. We can see here there is a volume of 7,400 but an open interest of 19,000. And for the 160 strike calls, we have 8,400 and an open interest of 8,700. So these could also be closing trades. So what they're doing, if they were opening the trade, is buying the 150 strike calls. And we know that since they did a ratio, let's put in the exact amount of contracts, 3,500 of these 150 strike calls. And then they sold the 160 strike calls and they sold 5,250 contracts. And so when we analyze this trade, you can see that this is a back ratio strategy. And what that means is that if Micron goes down, you can actually see it's going to be profitable. It's a positive. Only if it goes down considerably lower than about $121 does this become a negative loss here. And at the same time, if Micron rallies, you can see that it becomes a negative loss. However, through time, notice the blue is actually positive right here. This is a positive. So you can see that at expiration on July 19, when these options expire, even if we go and have a loss, if it rallies, it will actually become a gain. This is their max profit here at the peak of this blue line. So you can see that as long as Micron does not rally past this break even here, where this line is, it will be profitable at expiration. Okay, so that is about $179 a share. That is our zero break-even line at expiration. So they may be at a loss temporarily in the short term, but by July, the value of these options will increase through theta. Okay, so this strategy, it is bearish, but it is also bullish at the same time. So this is a very strategic strategy. Okay, and it's something to also keep in mind there. Even though it is a net negative delta trade, you can see here, it is also going to be profitable if Micron rallies. In fact, it would be more profitable because their peak profit is over here if it is higher than where it is today. Right? So keep that in mind, and let us know what you think will happen to Micron. And as usual, if you want access to the higher chance of profit trades, then make sure to go to our website, because as we mentioned, this is an earnings trade. It is higher risk. If you are interested in making consistent profits, then we want to make sure that we are in trades that do not have high risk, or we set up strategies that actually reduce our risk. As usual, please smash the like button. Take care and have a great day.